Hello learners, in this video we will discuss about trend analysis. Now what is trend analysis? The trend analysis is a technique of studying several financial statements over a series of years. In this analysis, the trend percentages are calculated for each item by taking the figure of that item for the base year taken as 100. Generally, the first year is taken as a base year. The analyst is able to see the trend of figures whether moving upward or downward. Now, let's move on to the features of trend analysis. A trend analysis helps in analyzing the financial performance over a period of time. A trend analysis indicates in which direction a business is moving, that is, upward or downwards. It facilitates effective comparative study of the financial performance over a period of time. And lastly, for trend analysis, at least 3 years financial data is essential. Broader the base, the more reliable is the data and analysis. Now, how do we calculate trend analysis? In case of a trend analysis, all the given years are arranged in an ascending order. The first year is termed as the base year, and all the figures of the base year are taken as 100. Items in the subsequent years are compared with that of the base year. If the percentages in the following years are above 100, it indicates an increase over the base year, and if the percentages are below 100, it indicates a decrease over the base year. Let's have a look at an example. As we can see on the screen, there is an example given to us. Calculate the trend percentages from the following figures of sales, stock and profit of X Limited, taking 2010 as the base year and interpret them. As we can see in the question, the years are 2010, 11, 12, 13 and 14, and sales, stock and profit before tax is given. Now we'll move towards the solution, that is, we will write year 2010, 11, 12, 13, 14 in the first column, and then we'll start with sales. Now sales will remain same as it is given in the question, that is $1,881, $2,340, $2,655, $3,021 and $3,768. Now we are supposed to calculate the trend, that is percentage change in sales. As we know, 2010 is the base year, so the percentage of first year will be same, that is 100%. Moving on to next year, that is 2340. Now in order to calculate the trend, we will divide 2340 by 1881 and multiply by 100 in order to calculate the percentage change, which comes to be 124%. Same is the case with next one, that is 2655 divided by 1881 multiplied by 100, which comes to be 141%. Again, same applies to another two cases, that is 2013 and 14, and the respective percentages are 161 and 200%. Now let's move on to the another column, that is of stock. Now the values of stock are 709, 781, 816, 944 and $1,154. So initially the trend of percentage change in stock will remain same, because now initially the value of percentage change will be 100%, as we know 2010 is the base year. Moving on to next year, that is 2011, the value of stock is 781. So we will calculate the percentage change by dividing 781 with 709, which comes to be 110%. Again, on the next year, 816 will be divided by 709 and multiplied by 100 in order to get 115 as percentage. Same applies to 2013 and 14. Now moving on to another column, that is of profit. Now the values of profit are 321, 435, 458, 527 and lastly 627. Now how will we calculate the trend? It is same as we did earlier. 321 will be our base, which is 100%. Moving on to the next year, that is 2011. Now 435 will be divided by 321 and multiplied by 100, which comes to be 136%. Moving on to 2012, 458 will be divided by again base year, that is 321 multiplied by 100, which comes to be 143%. Again we can calculate 2013 and 14 with the same formula. Now, as we have got the solution, now what we are supposed to do is to interpret them. Now, in the interpretation, what we can conclude? The conclusion will be the sales have continuously increased in all the years up to 2014, though in different proportions. The percentage in 2014 is 200 as compared to 100 in 2010. The increase in sales is quite satisfactory. That means the sales in 2010 and in 2014 are 100% and 200%, which means the sales increased by double. The figures of stock have also increased over a period of 5 years. The increase in stock is more in 2013 and 14 as compared to earlier years. And lastly, profit has also substantially increased. The profit have increased in greater proportion than sales, which implies that the company has been able to reduce their cost of goods sold and control the operating expenses. Now let's move to another example which says, from the following data relating to the equity and liabilities of balance sheet of X Limited for the period March 31st, 2010 to 2013, calculate the trend percentages taking 2010-11 as the base year. As we can see, different values for 2010-11, 11-12, 12-13 and 13-14 are given. For example, equity, general reserve, debentures, bank overdraft, trade payables, sundry creditors and outstanding liabilities. Now we are supposed to calculate trend percentages. So we will start with the solution. We will write first shareholders fund, and under it we get equity share capital and general reserve. As we know the base year is 2010 and 11, we will write it as 100%. So the value of equity share capital in first year is 1,800. So the trend will be 100% and 100%. Now in next year, that is 2011 and 12, the value of equity share is 1000 and general reserve is again 1000. So the percentage change will be 1000 divided by 1000 of base year multiplied by 100, which comes to be 100%. And in case of general reserve, it will be 1000 divided by base year, which is equal to 800 multiplied by 100, which comes to be 125%. Moving on to next year, 1200 divided by 1000 into 100, it becomes 120%. And in case of general reserve, 1200 divided by 800 into 100 is equal to 150%. In 2013 and 14, 1500 divided by 1000 into 100, which is equal to 150%. And lastly, in the case of general reserve, 1500 divided by 800 multiplied by 100 is equal to 187.5. After this, we are supposed to calculate the total of equity and general reserve, which is 1800, 100%, 2000, 111.11%, 2400, 133.33%, and lastly 3000 and 166.67%. Now moving on to long-term debts, that is debentures, they were 400, 500, 500 and again 500. So the base year remains 100% and in next year it is 500. So we will divide 500 by 400 multiplied by 100, which comes to be 125%. And same applies to other years. Now moving on to current liabilities, which includes bank overdraft, trade payables, sundry creditors, and outstanding expenses. Now, as we have already discussed the method to calculate the percentages, I will give an example of bank overdraft. 300 and the percentage will be 100. Now, moving on to 2011 and 12, the bank overdraft is 400. We will divide this 400 by 300 and multiply it with 100. So the percentage trend becomes 133.33%. And in next year, it becomes 550 divided by 300 multiplied by 100, which is equal to 183.33%. So this is how we will calculate current liabilities also. So at the end, we will write the total of liabilities also, which will be 750, 995, 1255 and 1390. And at the end, the total of equity and liability becomes 2950 and 3495, 4155 and lastly 4890. Thank you.